Welcome to WorldWire. Please subscribe and hit the bell icon for more breaking updates. November 17, 2025. The day dawns cold and silent across the heartland, but the stillness hides a storm brewing beneath the surface. The American Midwest is in shock. News travels fast in these tight-knit communities, and today, it's all anyone can talk about. China has abruptly ended its $1.1 billion soybean purchase agreement, leaving U.S. farmers stranded and scrambling for answers. What was supposed to be a lifeline for struggling farmers has become a symbol of broken trust and dashed hopes. Rural communities already fighting to survive now face a winter of deep uncertainty and fear for the future. The deal, once hailed as a turning point for American agriculture, has unraveled in a matter of days, leaving devastation in its wake. Farmers who planted in hope, investing everything they had, now face the very real prospect of financial ruin and bankruptcy. This isn't just about numbers on a spreadsheet. These canceled contracts mean lost homes, shuttered farms, and dreams deferred for entire families. The agricultural sector, already squeezed by rising costs, now stares into a financial abyss, with no clear way out. American farmers feel like pawns in a geopolitical chess game, their livelihoods sacrificed in international disputes far beyond their control. With China gone, a massive surplus of soybeans sits unsold, piling up in silos and barns with nowhere to go. No other market can absorb the volume China once did. The infrastructure built for export now sits idle, a stark reminder of lost opportunity. Equipment that was once a source of pride is now being auctioned off, as families try to salvage what little they can. The careful plans made at the start of the season are now meaningless, swept away by forces no one here can control. The scramble to find new buyers is desperate and mostly futile. Calls go unanswered and markets remain closed. Oversupply and plummeting demand have created a perfect storm, threatening to wash away generations of hard work. For many, this is an existential threat, not just a bad year. The very fabric of rural life is at risk. The panic is real, and it's justified. In the heartland, a promise unfulfilled has left scars that may never fully heal. The fallout was immediate. Soybean prices plunged to $11.24 per bushel, well below break-even for most farmers. Selling at a loss is now the norm, not the exception. Soaring input costs and collapsing prices have erased profit margins. The loss of the Chinese market has pushed thousands of farms to the edge of bankruptcy. Caleb Ragland of the American Soybean Association warns, without renewed Chinese demand or major government aid, family farms will disappear. The pain ripples outward. Local businesses, banks, and entire communities suffer as farm income dries up. This isn't just about numbers on a balance sheet. It's about families losing their land and their legacy. The crisis threatens the very fabric of rural America. At the heart of the crisis lies China's broken promise, a promise that once offered hope to struggling American farmers, but now feels like a distant memory. The sense of betrayal is palpable across the heartland, where every empty field and silent silo tells a story of trust lost. The much-publicized agreement was supposed to be a lifeline, calling for China to purchase 12 million metric tons of U.S. soybeans by year's end, a figure that sparked cautious optimism in rural communities. But reality has fallen far short. So far, China has bought just 332,000 tons, a tiny fraction of what was pledged, leaving warehouses and shipping terminals eerily quiet. Optimism has evaporated, replaced by a growing sense of skepticism and anxiety. Farmers gather in small groups, sharing stories of uncertainty and wondering what the future holds for their livelihoods. Even if China fulfills its promise at the last minute, total exports will still be down over 30% from last year. The damage, both financial and emotional, has already been done. The new commitments for future years are even lower than pre-trade war levels, signaling a troubling long-term shift. Many farmers fear this may be the new normal. The U.S. is no longer China's preferred supplier. Instead, China has turned to Brazil and other countries, forging new alliances and leaving American soybeans behind. The market has responded with a clear vote of no confidence. Soybean futures have tanked and prices continue to slide, deepening the sense of crisis. Traders see China's token purchases as little more than political theater, not genuine trade. The uncertainty has made it nearly impossible to plan for the next season. For farmers, this means holding a devalued crop and dashed hopes. Many are left wondering if their hard work will ever pay off again, or if this is the end of an era. The reality is stark. American agriculture is caught in a web of unfulfilled promises and global power plays, with little control over its own destiny. The trust is gone, and so is the market. For many, the chasm of doubt only continues to widen, leaving the future of American farming more uncertain than ever before. As U.S. farmers struggle with falling exports and mounting uncertainty, South America is thriving, seizing a unique opportunity to reshape the global soybean market. Brazil has become China's top soybean supplier, exporting a record 79 million tons this year, a staggering achievement that highlights the country's agricultural power and growing influence on world trade. Brazilian farmers are planning more than ever before, expanding their fields and investing in new technology, all in an effort to lock in their dominance and meet China's insatiable demand. Even if U.S.-China tensions were to ease, Brazil's grip on the market will remain strong, thanks to years of investment and a reputation for reliability. Argentina, too, has boosted exports to China by an impressive 65%, fueled by favorable government policies and a renewed focus on agricultural exports. Together, Brazil and Argentina have squeezed the U.S. out of its most important export market, fundamentally shifting the balance of power in global agriculture. In 2022, Brazil supplied over 70% of China's soybeans, while the U.S. managed just 21%. This dramatic shift has left American farmers reeling. The gap is only growing as South American producers continue to expand and modernize, while U.S. exports stagnate. U.S. exporters are scrambling to find new buyers in Europe, the Middle East, and beyond, but no market matches China's scale or appetite for soybeans. Years of relying on a single buyer have left American farmers dangerously exposed, with many now facing tough choices about their future. In global commodities, lost market share is nearly impossible to regain, and the consequences for U.S. agriculture could last for generations. Tariffs are the invisible wall blocking U.S. soybeans from China. A 13% tariff plus a lingering 10% levy from the trade war makes American soybeans far more expensive than Brazil's. No matter how efficient U.S. farmers are, tariffs erase their competitive edge. Chinese buyers simply go where prices are lower. South America. U.S. trade policy has handed a massive advantage to rivals. Farmers are forced to compete with weights tied to their ankles. As long as tariffs remain, any purchase agreement is just window dressing. China has no incentive to buy U.S. soybeans in bulk. Until tariffs are lifted, American farmers will remain at a severe disadvantage. Trade wars and preferred supplier status simply can't coexist. The government's answer? More aid packages. Over $30 billion has been allocated for farm relief, but it's not enough. Delays and political gridlock have left farmers waiting for promised funds. Even when aid arrives, it's a band-aid, not a cure. Experts warn these bailouts create dependency and mask deeper problems, like broken trade policy and market consolidation. Aid doesn't restore lost markets or make U.S. soybeans competitive. It simply shifts the burden from farmers to taxpayers. For proud, independent farmers, relying on government checks is a bitter pill. Relying on government aid is not a sustainable future for American agriculture. If China doesn't return and tariffs persist, farmers face a cycle of dependency. This erodes the spirit of self-reliance and discourages innovation. Planting decisions become political, not market-driven. The real solution is market diversification, finding new buyers and boosting domestic demand. Government should focus on trade deals and infrastructure, not endless bailouts. The next few months will decide if farmers regain independence or become permanent wards of the state. The crisis is a wake-up call. Relying on one market is a recipe for disaster. Without bold policy shifts, today's panic could become tomorrow's new normal.